Um, so just getting everyone, like I said, up on stage. First, just order of business here. You guys may have noticed we had it up yesterday. Crypto underscore town hall. Crypto underscore town hall is going to be the account in the future that we're going to be hosting these crypto town halls from. And so just encourage everybody to follow that account. We'll probably get it up on stage here in a bit. Going to take quite a while, a few weeks probably before we actually move over there, but we want to get everyone following it so that they'll be able to be alerted when we have the crypto town halls starting. So just give that account a follow. I'll probably mention it again later. So today is kind of one of those days where there's not a massive breaking news cycle, which are, to be quite frank, my favorite days. I really like having the deeper sort of conversations about what's happening in the space and what's important, and not necessarily being distracted by the next shiny thing that flies by and we forget about a day later, which has obviously been the case. I mean, the market has been up slightly a bit today. Bitcoin's up about 1.3%. Altcoins kind of seemingly sideways, but I don't think that's the story. I think what we want to get into today more is what the next cycles are likely to look like if this time is different. Obviously, we're seeing a huge focus right now on Bitcoin, and I think sort of a dismissiveness about a lot of the rest of the space. There are people who certainly believe that will continue, and then I think there's a lot of people who say this time is not different. We'll just see the same normal cycle where there's a focus on Bitcoin, and then it sort of flows elsewhere, and we see all of these other things building. And so I want to really dig into that with today's panel. James Safer, I know we only have you here probably for like 15 minutes, and you've become the king of the ETF conversation in crypto over here. Do you think that the ETF, I mean, to your knowledge, assuming that we maybe get an approval, which you guys are putting at 50-50, I mean, do you think that that really puts a massive focus on the Bitcoin side of things for the crypto space moving forward?
Yeah, so one thing I've been saying is one, I do think it puts more of a focus on Bitcoin, but also the one thing I have been saying is if the SEC and Gensler are going to give ground anywhere in the crypto digital asset, whatever you call it, ecosystem, I think it's likely going to at least start, if not finish, maybe even at Bitcoin, because it's the one area where it's been discussed on this panel extensively. It's the one area where Gensler doesn't claim it to be security, and he will name it as a commodity and say it's basically out of his wheelhouse. So I think things will heavily focus on Bitcoin going forward. Obviously, I can I can spew my own personal opinions in the space, but like I really do agree with the fact that it would be mostly Bitcoin, and I don't think initially, if you asked me a couple of years ago, I would have said that Bitcoin will come first, and then it would probably be not long behind, maybe a year or two, that we'd see things like Ethereum, some other products get ETFs. But now I think it could be much longer than that. Who knows? Things have changed quick. If you asked me a couple months ago, I would have said the odds of getting a spot Bitcoin ETF in 2023 were 5% or less. So things can change quickly, but I have changed my opinion from the idea that Ethereum and other things will come shortly after on the TradFi side of things. For example, I would have assumed, and I wrote this in 2021, that I thought Ethereum futures were next just because we already have them on the CME. But it looks like the SEC and Gensler have put a line in the sand and basically are saying the only thing they're even remotely somewhat comfortable with, and that's a very iffy statement, is the Bitcoin side of things.
Yeah, I think that's pretty clear. What I find then interesting is that obviously we have this launch of EDX Markets that has been the talk of the town, which is the exchange that's backed by Citadel, Fidelity, and Charles Schwab. They're offering four assets, right? Which is Bitcoin, Ethereum, Bitcoin Cash, and Litecoin. And the argument there, obviously, is that those are the four that have somewhat been clarified as commodities. Clearly not in Gensler's eyes at this point, even though he did once give the speech that people famously keep referring back to, where he said those four are definitely commodities. So you don't think that with Schwab, Fidelity, and Citadel offering trading of Ethereum that it could get an ETF sooner than we think?
I mean, it's obviously possible. I mean, the SEC, if we take one of my scenarios, is that I would, like I said, they're changing their tune possibly on the spot Bitcoin market, so it wouldn't be impossible for them to change their tune elsewhere. Also, honestly, I think we're not going to have an answer until we see a lot more play out in the Coinbase and Binance lawsuits, particularly Coinbase. So I think a lot of this is going to play out in the courts because it looks like from the current stance of the SEC and Gary Gensler, it's not going to be decided very clearly whether or not those are going to be allowed. Obviously, there's the CFTC would consider those to be commodities. There's, as you mentioned, Gary Gensler in the past has said those are commodities, but for whatever reason, he has been very rigid in his stance that now he's not willing to say those things. So I mean, first of all, we got to see if this spot Bitcoin ETF happens. Like, there's still a decent chance that it doesn't actually happen in August or
Right.
even at the end of February. So then I think after that we can come back and see like if they approve or deny what. Honestly, I'd be most interested in seeing the language. So these reports often end up being like 100 pages long, and oftentimes it's like a footnote here or there, or like some specific language that I read through and I find, and I'm like, that's interesting. So like when they approved the Bitcoin futures ETF under the 19B4 process, like the most interesting part of it to me was they basically said, and I've said this on these spaces before, was the reason they approved it is because the CME Bitcoin futures market is a market of regulated significant size with respect to the CME futures market. So basically with respect to itself, which is just like ridiculous in my view as a reason, but it was a way for them to get around and say, we're approving this, but we're not going to approve spot Bitcoin. So I mean, it all comes back to Gary and the SEC, and they kind of like it. It very much looks like, and I'm not a lawyer, but it very much looks like they come up with a decision and then try to figure out a way to use the law to back into that decision. So it really comes down to like what's in Gary's brain and what's in the SEC's brain and what they want to do. And like I said, he's a political animal. If he's looking at losses potentially in Ripple, obviously, but also as we think in Grayscale, he could be looking for a fig leaf to cover up and say like I wasn't wrong and basically make those decisions illegitimate. So it's completely political, as I'm pretty sure multiple people that are speakers here would say the same thing. So it's going to be very interesting to watch. But if you talk to a lot of the people in my world, they don't think this is going to happen just because of how avid and against this Gary Gensler and the SEC have been. I just think there's a lot of other circumstantial evidence that points to the fact that they might loosen a little bit on Bitcoin and Bitcoin alone.
Yeah, I mean, there's two massive data points in both direction, right? I mean, you have BlackRock that's 575 out of 576 on approvals, but then you have a 0% hit rate on anyone trying to get a Bitcoin spot ETF. So it's going to be interesting. One of those has to give ground, obviously. Dave, go ahead.
Yeah, I mean, what you just said, it was very, very important, James. I think that this gives him, at least in terms of the ARK ETF and the BlackRock ETF and other rumored ones, it gives him the chance to take a win and seriously, claim politically that he's taking a win. His argument could easily be, listen, we've been waiting, we've been pushing the industry to give us a surveillance sharing agreement. This is the first time we're getting it. This is exactly what we've been asking for. Look how great we are. We're difference. I mean, it's a rhetorical device. We all know that. You use the word fig leaf, good example. But the truth is that he's kind of besieged these days. And, we've heard from multiple Democrats, from Democratic lobbyists even, that they're sharpening the knives. And so the ability to take a win is something that is kind of important, right? And he could.
You mean sharpening the knives against Gensler?
There are a lot of
sharpening
people
the knives
who are
against Gensler.
Yeah, I mean, it wouldn't happen immediately. It would happen in the changeover, running up to a next administration if they win again. I don't think, unless something really horrible happens. But the reality is it literally gives him an opportunity to say, "This our policy. This is what we've been waiting for all along." And don't underestimate that, because as you've said, if he truly is a political animal, and I don't know Gary well enough to understand what his motivations are, but if that is true, as a computer scientist would say, an if then else, if that is what he is, then in this case, the smart move, and he's not done. The smart move would be to say, hey, this is what we wanted.
Yeah, go ahead, Greg.
Hey, good morning, guys. Great discussion. This is Foss from Canada, where we do have a spot-based ETF for Bitcoin approved, as well as some other digital assets, but having experience in the Square, my odds are somewhat higher than James's odds, which is to say I'm higher than 50-50 that BlackRock gets approved. And one of the things I can share with you is the pricing mechanism and the creation redemption process that BlackRock is proposing is exactly mirroring a spot ETF in Canada by the name of Evolve. My good friend and CIO and COO at Evolve, who is responsible for that pricing mechanism and lack of slippage or basis risk between the spot ETF and the actual pricing of Bitcoin and closing price of Bitcoin, has a very detailed explanation that, Scott, I'll share with you because I'm not smart enough to figure out how to share it with the Nest. But it was a podcast that I was on, and it's a 10-minute clip of that podcast as to why the functionality and the plumbing of the BlackRock spot ETF, in my opinion, is second to none in North America with respect to the risk management and the manipulation or lack of ability to manipulate spot prices in Bitcoin. So I'll go on the record as saying I'm higher than James. I appreciate that it's always a probabilities curve, but certain people within the industry in Canada, certainly, and this is only Canada, are giving it as high as a 90% chance. Now, this is Canada. We live in your attic risk-free. I'm not going to tell you guys how to regulate your markets, but a lot of people in the know give it quite a high likelihood of success, just based on the plumbing and the actual operations of running a spot-based Bitcoin ETF. Over to you guys. Thanks for having me.
Yeah, I mean, we've seen that's the thing, is there's so much precedent for this being done in other parts of the world. It's not like the United States would be the first. I mean, we have these products or similar ones in South America, Canada, in Europe. Eric, go ahead. I saw you lifting your mic.
Yeah, in prior rejections, the SEC has strongly intimated that their concern was that the exchanges that generated the spot prices were not trustworthy and manipulated. And so that was like the basis for their rejection in most cases. And I think that, this new EDX exchange would, if they think that this exchange has more credibility than the other exchanges that they rejected in the past, I think that would be kind of what allows them to approve it in the new world here.
Yeah, I think that makes a lot of sense. But what I find, go ahead, Hung. I see you want to speak.
Yeah, so I just want to. I just came back from Switzerland from a conference where a lot of the institutional customers, banks, and regulators were there. One thing I just want to know, I cannot. It's hard for me to opine on the possibility of ETF being approved in US or not. My personal vote is, it's probably going to be hard unless there is some change in the people who are overlooking and approving the ETF. However, one thing I would note is that the crypto market is a part of the capital markets as well when it comes to marketplace. And what we have been seeing is that a lot of the customers on the institutional side are moving their capital over out of the US. And we have been also, as an exchange, talking to various banks in different jurisdictions. And one of the interesting line that I got from one of the banks in Europe this time during my trip is that they basically say to me, quote unquote, we can provide a Euro banking route. We will be providing banking route in the Asia currency or Middle East currency, but we're not touching USD. So I think that is a very interesting thing that is happening as well, regardless of what is going to happen with the ETF approval in US, because I think for institutions where they do make their own investment from a macro perspective, they will find a way to invest. And when they look at the risk assessment of various cryptocurrency, I think Bitcoin is probably going to score pretty high on the list.
Yeah, Hung, I want to stay with you for a minute here. First of all, am I going to see you in London next week by any chance? Because I know I'm going to see you out. Too bad. I'm looking forward to seeing Hyder, Raheem, and everybody out there. Yeah, next time. Yeah. Awesome. But obviously, listen, so you operate both OKCoin and OKX as CEO and president respectively. You probably have more insight into the challenges here of operating in the United States, but also maybe the advantages or challenges beyond. So with all that's been happening in the last few weeks, even outside of the ETF, how have you been able to navigate that, and how do you approach it, and what's the situation in the United States right now in your eyes trying to operate an exchange? I mean, there's a lot of people saying the SEC doesn't even have the jurisdiction to regulate an exchange in the United States, and Gensler's even said that in the past.
Yeah, so I think when it comes to exchange operation, there are two aspects. One is the regulatory aspect, and then the other part is operational aspect. On the regulatory side, our stance has always been that whatever regulatory landscape changes, however it changes, we will take a very proactive and transparency perspective, and we have very proactive conversations with various regulators in different jurisdictions. We pursue licenses where we see fit. U.S. is always despite all the challenges, seeing what is playing out there between Coinbase and SEC, I still have very high hope for what is possible in this land, because I think there is a legal infrastructure and framework where we can fight for what is right. So we are committed here, but at the same time, we are pursuing licenses in various other jurisdictions where, for example, EU, we have been there for 3 years, and we will continue to build our license mix there. Asia, obviously, you see Hong Kong and Singapore and others coming up. And Middle East is inevitably a very high-profile contender for the quote-unquote crypto hub from a regulatory perspective. So I think all regulators are thinking about it, but obviously there is different stance, different level of sophistication from different regulators. So I think that is interesting. From our perspective, we have always been taking the transparency stand instead of hiding things or trying to bypass. I think it is what it is. We will just have to make it work. Operational side, I think there are considerable challenges for the overall industry. I think the most notable challenge is obviously banking routes. Actually, for the rest of the world, I think the banking industry is tackling it. Different banks are trying to grab market share and developing that relationship with exchanges that are credible, that have good marks, so to speak, with regulators. On the U.S. side, there are challenges, obviously, right? Because the larger banks are probably more risk averse. And then for those who probably want to be more proactive in taking on cryptocurrency, there are precedents that basically add a little bit more hurdle in their decision-making process. So I think things will play out a little bit, but in U.S. probably takes a little more time.
So just a period of pain before we finally get some clarity, it sounds like, is sort of the consensus. Yeah, I think that makes perfect sense. Jerry, I saw you had your hand up.
Thank you, Scott. Thank you for the invite. Long-time listener, first-time caller, as they say. I'm busy building and trying to ignore the cycle, but I'd like to answer both questions based on what I've seen. In terms of the ETF approval, given the political nature of this, I think it's just a question of when, not if, and the likelihood it's likely going to happen after the election, I would say. But you also made a point about the structure of the market in the next bull run. I don't think structurally anything actually changes. I think that if a Bitcoin ETF gets approved, more liquidity will flow into Bitcoin and it'll probably get more dominance, but liquidity still flows between all the coins in the market. Bitcoin is always king. And so I believe that once it gets approved, more institutional money comes in and it's better for the entire market.
Yeah, I don't disagree. So yeah, I guess back to the original question, will Bitcoin dominate the next cycle? It's the title here. Do you think that this time will be different? Like I said, we've sort of seen these narratives before. Bitcoin dominates on the way early into a cycle, and then it kind of ends up flowing, and then it loses the narrative for a while. But I think an ETF is a very, very compelling argument for Bitcoin to solidify its role here. Anyone can feel free to jump in. I mean, I can just share my own thoughts endlessly. Foss, you got to have thoughts on that.
100%. Well, look, guys, I'm a 30-year veteran of risk markets, and if I didn't have my decentralized blockchains versus centralized blockchains versus centralized blockchains. At the end of the day, I'm very concerned with the fiat system, and Bitcoin is the only fiat Ponzi. So I believe that Bitcoin dominance will continue. It is your insurance policy. I like to think of it as a credit default swap. and neither does Greg Foss. It's an open market. Please understand what you own, but I own Bitcoin because of my concern over the fiat Ponzi. Full stop, and that's all I can say. Thanks.
Reinvestment into other stuff. And then while there's some interesting technical kind of breakthroughs in scalability and privacy, I'm seeing so much stuff around the ZK space. I'm seeing a lot of really interesting developments around creating from an application perspective, challenging the companies that focus on data, challenging some of the AI themes that are coming out. That is orthogonal to the Bitcoin thesis, right? It's not about fiat. It is about technological advance, and I mean, for me, that's the stuff that's really exciting to watch, because the promises that people have made about what the software can do are really coming to fruition.
I tend to agree. Dean, you have probably been around longer than any of us in this space. For anyone who doesn't know Dean, he's about as OG a cryptographer and in this space as you can get. So I would really love your perspective here.
Thank you. Yeah, I'm definitely the technologist that wandered in off the street here. So following up on what Jerry and Lex said, from my perspective and from what I've seen as a builder in the space and as someone who's thought about it and thought about what we could do with smart contracts and what we could do with, programmable money, to me, Bitcoin is like gold, right? You want this underlying asset that grows in value that people can lock up and provide a anchoring financial thing, reserve to lean on. But value is created by creating new mechanisms for humans to interact and do things. And so the beginning of the cycle, you grow your asset base, so the foundation, so that you can build these new kinds of ways for people to cooperate, these new financial instruments, these improved efficiencies or different ways of, there's this great financial stuff of different ways of leveraging, but there's also the places where it leaks into parts of the economy, like the creator economy, or as it moves into much more late stage economic things like freight and chain of custody for freight. All of those are what add the enormous new value, and they're from a technologist perspective, they are the driver for why we build this stuff. And the early, relatively simple, but but deeply important financial instruments, are the groundwork for that future of improving our ability to do everything else in our life besides just the finances.
Sorry, my mic wasn't working there. I love that. Eric, I saw you had your hand up to follow up.
Yeah, sure. So I think at the first level thing to consider here is ambiguity versus clarity. And I think Bitcoin has gotten a lot of clarity in the recent regulatory environment, not named in any of these, actions from the SEC. Bitcoin is has a little bit of a clear sailing situation, whereas ambiguity has been thrown at a lot of the other digital assets by Gensler, saying they're securities, things getting delisted, etc. So the second order effect of that is there's a lot of developer talent that kind of drives the digital asset industry, and they've been building things on other chains for various reasons, and some of those chains are getting called into question now, and we're seeing a lot of money get raised and a lot of developer talent, looking to see if they can build some of their things on the Bitcoin blockchain, because it's got a better chance of sticking around. So, I think in the short term, it looks like Bitcoin is going to get a disproportionate amount of the incoming money and love here, especially if an ETF gets approved. And I would just take a little bit of exception with some of the prior comments. I think people underestimate just how much money can flow into a good store of value. I think the value proposition that Bitcoin is going after is quite literally hundreds of trillions of dollars. Even gold alone, right, at like 10 trillion plus would be 500,000 per Bitcoin. And some of the other cool technological things are kind of technological equity investments. Not that things like Google and Facebook and Apple aren't awesome investment opportunities, but I wouldn't underestimate just being a nice, simple store of value that works in the digital age.
Eric, I love the point that you brought up about people sort of returning to Bitcoin to build now, because that's been one of the huge narratives. Obviously, we've seen it with ordinals and BRC20s and a lot of that, but it seems that there are a lot of people now focusing on building things on Bitcoin that already exist elsewhere. The question then becomes why to do that? Well, Hong, I saw you had your hand up, but you can go ahead and then we can circle back to that question.
Sorry, it was hard for me to put my hands down. I try to find a way to put it down.
It's okay. I'd rather you go and then we can move on after.
Thank you. Yeah, so I agree with a lot of the speakers who have said, which is basically, when you look at the crypto market cycles, it's essentially a narrative playing out, different narratives playing out over time and being validated over time. And the reason that crypto has been keen in the previous cycles is that Bitcoin has been keen in the previous cycles is that Bitcoin has a very clear value proposition. In Turkey, for example, we have been building in Turkey in the last few months, and we are going to launch an office in Turkey. Post the highly anticipated election, within 1 week, the local currency depreciated 20%. So in that type of economy, there is very hard a way for the people to find alternatives other than, say, USD and Bitcoin, right? Or in crypto market, maybe USDT or USDC. So I think that has been very established over the last few cycles. The other side is obviously, developers and builders who are building the alternative, the so to speak, altcoins. And there has always been also a debate within Bitcoin community in terms of how to think of Bitcoin, whether it's just a store of value and is that enough, or do we want to actually build a new world on top of Bitcoin in terms of second layer, in terms of BRC20. So I think there is a very interesting debate there. From my perspective, I actually have been saying this during 2020 when the Bitcoin was going through a bull cycle there. When we see a lot of institutional money coming in, particularly with the anticipated ETF being approved, spot ETF being approved for Bitcoin. On the one hand, I think there is a lot of anticipation of, the Bitcoin is going to move. There's going to be a larger adoption from the institutional side. However, my instinct is also question mark. Before we actually have a solid entrepreneurial ground for Bitcoin on top of Bitcoin, where we actually can leverage on the security, on the non-changeability of Bitcoin, on the smartness and the decentralized nature of Bitcoin network. Before we can utilize that to use for things beyond store of value, and when we have institutional money flowing in, and there is a very high risk of it being Wall Streetized, over financialized, where Bitcoin is becoming a annotation in the larger financial market, where the original hope of actually seeing a more decentralized world is more remote from us. So from my personal perspective, I do have that concern. And there is a divided me inside, where on the one hand I do want to see more regulatory clarity from SEC on the ETF, but on the other side I also think that it's not necessarily a bad thing when we have a prolonged cycle for approval of such a thing, because it gives the developer more time to actually develop and build.
I agree with that
having
100%.
More robust system.
Yeah, I agree. And I think all of us are split, right? Because we know that it's good probably for price and mainstream adoption to have things like a BlackRock ETF. But I think the true like Bitcoiner inside of all of us desires for our incumbents to be the winners of that, and for people to move to self-custody and to use the assets for the original ethos. Go ahead, Jerry.
Yeah, I mean, there's a point I think we need to stress, is that these blockchains are not just digital assets, they're also digital networks. So right behind clarity around ETFs, there may also be clarity around stablecoins. Now, if that happens, and Scott, you've mentioned this many times before, probably the only other use case in our industry that's actually gotten a product market fit are stablecoins. If that clarity comes through, that benefits the smart contract platforms like Ethereum, Tron, and others. So I think that you have to, the digital asset side, I think Bitcoin is king. I think a lot of us came into this space because of Bitcoin, but I think the blockchain and the asset associated with the blockchain that'll accrue the most value ultimately will be the one that garners the largest adoption. And we don't know which one that is yet. There may be yet another killer use case that comes up that does get the billion users, and then whichever blockchain hosts that use case will accrue that value. So it's not just one thing, it's many things. And I love the analogy of that blockchains are countries or cities. It's not just one angle you have to look at these things from. It just so happens that right now there isn't much real world adoption of the blockchain space. Well, when that happens, I think there'll be a shakeup.
Right. I think some people would argue that simply holding Bitcoin is that adoption, but I hear you and agree with you. Go ahead, James. I know you probably got to go soon, so jump in.
Yeah, I actually took care of some of that stuff already. But I was going to say, part of the other problem here is you can't deny I know everyone wants the crypto innovators to win, but you can't deny also that a lot of the crypto innovators have been fraudsters, scammers. There's been an attraction of a lot of very not so great people to the industry. Part of it is because the get rich quick scheme and the fact that things have become so profitable. So there's a lot of bad looks and incompetence in the space, and that's why I think it's leading to openings for TradFi and other companies to come in and really take some meaningful market share in the space. Obviously, this is only the very beginning, but you can't deny the the bad things and bad actors in the space, and there's been a lot of them over the last few years.
I agree. Go ahead, Greg.
Hey guys, Scott, thanks for having me. I got to jump at a quick statement. I'm not a technologist, but I play one on TV, right? So you have the trilemma between decentralization, security, and scalability. And you can have two, but never three on a blockchain. Think about that and remember that's why Bitcoin, that's why decentralization, that's why not your keys, not your coins. But what does the BlackRock ETF bring to the world? Very simply, from someone who's managed money their whole life, it brings a CUSIP. And when internal systems are set up in an institutional portfolio that revolves around a CUSIP identifier of any asset in your book, it simplifies your life immeasurably. So I don't like to think of Bitcoin as digital gold, although you can think of it that way. I think of Bitcoin as digital energy. And that's where it blows the minds of people who have an ESG narrative that was largely formed by BlackRock that Bitcoin is bad for the environment. No, Bitcoin is actually very good for the environment, and a BlackRock approval of a Bitcoin ETF knocks the ESG narrative against Bitcoin down a few pegs. So this is very positive. I am very happy to be involved in Bitcoin ETFs in Canada. I think they increase on-ramps. I agree, though, that ultimately, not your keys, not your coins, that's not a true Bitcoiner. But for the Ontario Teachers Pension Plan and all of the plans in Canada that can benefit from exposure to Bitcoin for the benefits of their stakeholders, gosh, I'm so happy that a BlackRock CUSIP will exist for a Bitcoin spot ETF and not a futures-based ETF where they bleed theta or time value. Thanks for having me, Scott. I got to run. You guys are brilliant. Eric, shout out to you, and give our buddy Mr. Saylor a good hug for me, okay? Thanks, everyone. Love you from Canada.
Forget that, Eric. Just have MicroStrategy send each of us on the panel 1 Bitcoin. We've earned it by now.
Yeah, that'll happen.
Okay, maybe not. I guess not. Go ahead, Dean.
I just wanted to, I really like that, it's energy rather than gold. I wanted to clarify that kind of the key thing, when Bitcoin first came out, I was not excited about it because, we worked on Cybercash, we worked on various other, money schemes or worked with them. And here's this thing that it's not fast, it's not anonymous, and it's not, it's not integrated with anything. It just didn't have any of the flavors we wanted from money. Right, but it has this wonderful ability to be this energy source, this foundation you can do all these other things on. That was the way in which it's like gold. Didn't want to compare the value. The key thing about digital stuff is we can keep making more of it, whereas gold is, you have to dig it up. So I like the energy analogy, and I'm going to chew on that some.
But Dean, so listen, I want to talk to you about what I was bringing up before. Obviously, we're seeing a lot of things built on Bitcoin. You've been building here for ages, since literally the very, very beginning. But you are building things that are not on Bitcoin now.
Absolutely.
Right? After seeing, correct? So
it leverages proof of stake from Cosmos, but it is our own blockchain, yeah. And it's really,
right. So why have you chosen to do that? And do you think that you'll then bridge back to Bitcoin, or you'll go back to build on Bitcoin? What I'm interested in here is that we're seeing so many things that were built elsewhere now going back to being built on Bitcoin, and I'm trying to get to why and if that's going to be successful, if there's a reason for that.
Mm-hmm. So it will be interesting to see how that works. I think it will be successful, partly because Bitcoin, will be the first mover in the next wave, if you will, because it for good infrastructure reasons, it typically has been. But it doesn't have speed of transactions. It doesn't have fast finality. It doesn't have privacy. It doesn't have many things. It deeply suffers from that trilemma. From a technologist point of view, zero knowledge technology, for example, is one of the things that cuts through the so-called trilemma. So I think there's plenty of ability to do things elsewhere that cannot be done on Bitcoin. As we find some key use cases, especially as they find product market fit, it will be worth it to find a way to anchor them back to Bitcoin, right? The NFTs for images don't move around very fast. Right? I'm not trying to do chain of custody with an NFT where the NFT is a bill of lading that needs to be private and it's being handed off from one driver to another as a package moves, but it would, raise, world GDP by 5%. That's a big number, but it's a long way to get there. You're never going to get that on Bitcoin. So I think there's a lot of value in a lot of the continuing innovation so we can get to the much richer digital economy that I think when people look back from there, we're really still at the very, very early stages of what all this technology can do.
I mean, Lex, do you think that these things need to be built on Bitcoin? Yeah, I see you actually were putting your hand up as I said that. But...
Yeah, I got to hop too, so I'll try to keep it brief. But I think I would love to see a world where Bitcoin is used for the purchasing of the many digital assets and many digital objects which are built on smart contracts platforms that focus on, performance, scalability, security, the ability to have lots and lots of different rollups. I mean, it's sort of, you can't cram that stuff in, right? That's not the point of the things. And that's okay. I think a good outcome is to say, like, the utility and value of Bitcoin is, yes, absorb the fiat demand, but it's also, apply it for the demand that's being generated in crypto and in digital goods. So I think these things are additive. I think Ethereum and the technologies around it, and I guess the thing I would say is that Ethereum to me is likely to eat all of the technological advancements of Cosmos and the rest, the way that they've been able to incorporate proof of stake and the way that rollups are kind of mirroring the many chains and kind of that you could set up in other ecosystems. So I do think you'll have a winner take all for the smart contract stuff, and then you'll have a winner take all for the asset that's being used to buy this. And it would be fantastic if more Bitcoiners were participating in the Web3 economy, using their assets and kind of creating more utility from that.
So Bitcoin could be the base currency of Web3?
It's already important to Web3. I don't remember the number off the top of my head, but I think it's 5 to 20 billion wrapped Bitcoin on ETH at the height of the last cycle. So there was a meaningful amount of it, but ETH being used as a staking asset is generating real interest rates. I think it'll benefit the Bitcoin ecosystem to think about how it can be applied as one of the payment processing options inside of Web3.
Lex, I'm going to let you leave in 1 second, but I have to ask you then, have you seen anything compelling for actually bridging Bitcoin between these other chains then?
Look, I don't think there's a difference between an ETF and wrap Bitcoin. I mean, an ETF wraps Bitcoin in legal documents and integrates them into the traditional wealth management system, right? Portfolio management, all the stuff we talked about. Similarly, wrapping Bitcoin and having that be a token on Ethereum does the same thing. It just turns it into a standard that can be used in that ecosystem. So I think there are solutions, but there's probably cultural barriers in the same way that, like, if I want to hold Bitcoin directly and that I don't really care for the ETF and I don't care what the Ethereum people think, but if I want the value of Bitcoin to go up, you need it to have more demand. And if you want more demand, that's going to come from the places where people are, and the places where people are in the fiat economy, in the Web3 economy. And so I think that's how I would think about it.
That's really interesting. I think in the short term, it's very clear that a BlackRock ETF would be more demand than probably in the Web3 economy. But I could see down the road, if we really see major development in that side, that it could become a serious player in there. Dean, go ahead.
To me, about your sort of question about, is it the ultimate payment mechanism? And I think because of the characteristics of it, it really isn't. But it seems like the ultimate collateral, and that's how I see a lot of these platforms thinking about bringing Wrap BTC into Cosmos, bringing Wrap BTC into these different ecosystems, is as that collateral, so that you can have it underpin other financial activity, have the people who are holding on to that collateral turn it into stable that they can use to engage in more complex financial arrangements, and that's a lot of energy.
Go ahead, Eric.
Yeah, I would add, I think we just need to kind of frame the orders of magnitude here of opportunity. Just think about the size of a massively successful technology company, a Google and Apple, kind of thing. We're talking about $1 trillion to $2 trillion. And then think about that very simple value proposition of an entire country's currency going to shit, like Turkey, Venezuela, Argentina, Brazil, all these countries, right, where trillions and trillions, tens of trillions, if not hundreds of trillions of dollars are going to be looking for a home. Any of those sovereign debt fiat derivatives that have interest rates that aren't keeping pace with the real inflation rate, those are locking in a loss. So there is an unbelievably massive value proposition to just hold Bitcoin as a store of value. Even gold is not really holding its own particularly well. So I think you got to first look at it in that context of value proposition and just realize that Bitcoin ETF or not, the demand for Bitcoin globally is extraordinary. There's 180 currencies in the world. I mean, ask yourself, 30 years from now, how many of those currencies are still going to exist? I think it's probably half of them. And where's that money going to go?
Right. I mean, boring doesn't mean small, right?
Exactly.
I think everybody just wants to innovate and continue to iterate, but at the base use case, there was a reason that Bitcoin was created, and that hasn't changed.
Yeah, gold's pretty boring, but it's bigger than big tech.
Yeah, absolutely. Tom Dunleavy, I saw you. We brought you up. You were requesting. I always love to have you up here. So I'm sure you requested because you have something to say.
Yeah, sorry, it's been a wide-ranging discussion so far. One point I think we haven't really made yet is Bitcoin, because of its economic weight, is the biggest settlement layer. So there'll always be a natural interest to try to build things on it. But Ethereum has really had the weight of developers. I would push back on the comments from a few others that say there's more building on Bitcoin than other ecosystems, because from what I'm seeing, it's more people are still building on Solana, people are still building on Cosmos, people are still building on Ethereum because of the programmability and the sort of the money moving through those networks today. Bitcoin is really, really powerful as a store of value. And I always want to push back on people who say we need to be a lot more than that, because it is a huge use case. It is a huge TAM. If it can just be this one pristine thing, I think it really just helps solidify that in the minds of everyday investors, right? If they know that 1, 2, 3% of my portfolio can be invested in digital gold, and that digital gold is Bitcoin, and I don't have to worry about it being maybe a tech asset or maybe potentially some kind of technology company or whatever. I think it sort of muddies the message when we try to do other things with Bitcoin. So really just trying to solidify that the next cycle, I think, is really important just for Bitcoin and accruing more value.
Go ahead, Bruce.
Yeah, I mean, this is an interesting thing. I've thought about this for a long time, kind of the what chain to build on. I'm not that technical, and when I got in this space, early on and wanted to build other things, I just kind of looked at it as a layman and said, to me, it seems like the strongest chain is a good place to build. It's just one less thing to worry about. This space, especially those who've survived a long time in it, know that this space is just completely crazy and it's always chaotic and there's always problems. And it's very, very challenging to be an entrepreneur in this space because there's always some kind of crazy chaos coming along. So, my thought is like, what I want to avoid as an entrepreneur is I want to avoid calls at 2 a.m. that ruin my life. I want to avoid, I'm friends with Phil Potter, and he was COO of Bitfinex. And I remember, he was on chats just like this on Discord right when they got hacked. And, the misery in his voice, I'm like, I don't ever want to deal with that. So, the idea of, having customer, I don't hold customer assets because I don't want to get hacked. And I don't want to be on a chain where I get a call at 2 a.m. or I wake up and say, oh boy, the chain broke, and, this kind of thing. So it's less likely with Bitcoin. Certainly Ethereum has shown that they have a lot of stability and they've built, something very big. But, I think one of the best criticisms of Ethereum that I've heard came from Adam Back, where he said that, they've embraced the internet motto of move fast and break things, which worked well with the internet because it just encouraged people to put on the gas and, okay, things break, but you keep moving and you can fix them, with a website, okay, your JavaScript breaks. Okay, you fix it. But in the financial world, you don't want things to break. And there's been some things like Polkadot and other things, that more stuff has probably broken around Ethereum. But in defense of Ethereum, I'd say that they've been more open to encouraging building, which is a really good thing. One of the weaknesses, I would prefer to build on Bitcoin. I'm passionate. Most people know I'm really passionate about digital securities, which is that's the $100 trillion opportunity. BlackRock is talking about that, just like they're talking about Bitcoin. For a billion reasons I could get into. It's time to modernize that. And the old security system is based on like 70-year-old technology. It's going to move to a digital world where you can move securities across borders and move them quicker and everything else. So this is going to be tokenized. It's a real thing with a real use case, and it solves for a real problem. And it's going to be built on some chain. I think Bitcoiners should be more welcoming, because it's interesting. A lot of Bitcoiners are like, hey, anything can be built on Bitcoin. And then they'll also say, oh, everything is junk. For Bitcoin to be the chain that succeeds, it has to, ironically, go against what's a lot of the Bitcoin ethos of junk coins and other things. And it has to embrace everything. And if Bitcoin succeeds at being it has to be permissionless. So if Bitcoin succeeds at being this layer, it will have scams and it will have junk and it will have NFT booms that are, being, way too high priced and this kind of thing. Otherwise you should encourage it to be built on Ethereum, because securities is a multi-trillion-dollar market. And even something as small as online collectibles, I think is a $22 billion market. So even just
Yeah.
collectibles and art is a big thing. So, I want to see this stuff built on Bitcoin, but I'm open to other chains. I like Lex's theory that maybe you have Bitcoin as the money and these other chains, but one way or another, Bitcoiners should recognize this stuff is going to get built. It's going to get built somewhere. Maybe Bitcoin's the best chain for it. Maybe not. I don't know.
But you're talking, so I just want to be clear for people listening, because I know we have an audience that's not so deep down this rabbit hole. We're talking about tokenizing real world assets, right? And you hinted to the fact that BlackRock has talked about it. That's one of the more underreported stories, is that in BlackRock's, Larry Fink specifically, investor letter in March, he talked extensively about the future of, the financial system being tokenized and effectively on blockchains. Like, think about, you tokenize your stocks. So rather than having to wait 48 hours for them to clear and do it through a broker, you can transact directly with a token direction you're going here.
Yeah, it's a really, really big deal. And no, I've said this before, but nobody should underestimate the size and importance of BlackRock. Nobody should underestimate the size and importance of BlackRock.
That comment about BlackRock.
Exactly.
Yeah.
Exactly.
Literally.
But let me touch on this securities thing, because it's really, really important. It's the biggest story in the world and in this space, in my opinion, other than money. So my thought is Bitcoin is really, really good for solving this problem of trusted parties, and kind of a variation of what's called the Byzantine general's dilemma, which is sort of how do you can look it up for those who don't know. I know you know, Scott, but how you can deliver information in an untrusted environment. Okay, so it's really, really, really good for knowing what's true and not having to rely on anybody. So you can say, here's my money and I know it's real. There are a lot of things that technology isn't useful for, like whatever, any goofy idea that people throw blockchain on, dog training on the blockchain or ice cream on the blockchain or whatever. Securities, it does work and it does make sense because there is a ledger problem. Forget about securities being centralized. They are centralized, but the ledger is also centralized with a third party. So currently today, when you buy Apple stock or something like that, Apple doesn't have a cap table like a startup does that says you own it. It's done for public companies like Apple and Facebook and Google and Microsoft, all of them, 100% of all public companies in the United States, all clear through this big, goofy, complex, clunky, stupid system that has been built. It was originally built in 1934 and 35 and has been iterated on. By the 50s, it kind of went through a big, capacity issue. By the 60s, it had a really, really bad capacity issue. They were they used to have these shares in paper. Okay, so they had bicycle messengers that would drive all around Wall Street and deliver. At the end of the day, they'd say, okay, Bear Stearns sold 10,000 shares of IBM, and Merrill Lynch bought 9,000 shares. We're going to settle up with the 1,000 shares difference, put it on a bicycle messenger, and he's going to drive across town. So that system became so clunky that 90% of the firms, New York Stock Exchange firms in the 60s, failed. The whole market was going to collapse. They didn't know how to save the stock market. It was completely dismal. It was a big, big bear market. They ended up having to close the exchanges on Wednesdays just to try and reconcile. They started closing early. They'd close the markets at 2 just to try and catch up with all these goofy piles of certificates that were around. So to solve this, they came up with this thing called Street Name. They said, hey, let's make a new organization. We pile all these certificates in this one place and we'll trust them. Long story short, that issue failed later. And then, by the 90s, we have what's called the current Street Name system. So when you buy stocks in the United States, you actually have a claim on a claim on a claim, and all the money is ultimately held by DTCC. And then it's held in this street name ownership of this group called Cede & Co. CEDE. You can look it up. Cede & Co. is the actual beneficial owner, and this has been held up in court, of all securities. If you think you own Apple stock, you don't own Apple stock. You own a claim. Suppose you have it at Schwab. You have a claim on Schwab. Schwab has a claim on DTCC. and then DTCC has a claim on CD and Co. It's actually more goofy and complex than that. But the bottom line is, it's this big gunky goofy ledger, and nobody even knows what they have. That's why you're able to short more AMC and GME than exist, and that's why Dole Foods, when they got acquired, they had a million more shareholders than they thought, because people owned shares that they didn't even, the company didn't know what they had. It's a big mess, and it is solved by a distributed ledger. A distributed ledger specifically solves for this trusted party. When I send you a Litecoin or an Ape or an Ethereum ERC20 token or a Bitcoin, you know for sure that you got it without verifying it from anybody else. When somebody sends money from Coinbase to Kraken, if you send IBM shares from Merrill Lynch to Morgan Stanley, that has to be verified by this big goofy clunky system, and it takes days. When I send you Litecoin, you don't need a big goofy clunky system. You can look on the blockchain, and whether you like the asset or not, you all agree. I mean, even the biggest hater knows that an ERC20 token is real, and it could be the worst token, but we all agree that it exists. And that solves this problem of trusted third parties. And it's a really, really, really big deal. If we can solve that for securities, we can make stocks work better. And stocks are the backbone of the entire global economy. They're just as important, if not more important, than cash. So money is a big deal. Bitcoin is a great application, but securities are right up there. I mean, it is the mother of everything. Every business, from your local hot dog stand to Microsoft, they're all securities. And if we can make them work better, we'll improve capital formation, we'll improve the way startups work, we'll tear down borders so that you can start buying stocks in other countries. There's no reason I shouldn't be able to send anybody on this call a share of Microsoft on their phone. Why not? We have the technology. I can send you an ERC. It's inevitable. It will happen. It has to happen. Gen Z is going to demand it. The current systems are based on this goofy old paper system going back decades. It's going to be a big deal, and it's going to be really, really good for the world. Just like when the first stock was invented in 1694 or whatever, Dutch East India Company, that changed the world. This will change the world. It's a really, really big deal what BlackRock is doing.
Bruce, what a masterclass. That was awesome. It's almost like we should have you up here every day. Really weird. Tom, I pinned one of your tweets above in the nest, which says the market for on-chain asset tokenization is $5 trillion. Where do you get that number? And obviously that makes Bruce's case even more compelling.
Yeah, Professor Bruce, that was fantastic. I feel like I got a certificate after that. So that was awesome. Thank you. I just want to provide a little more context here. So when we say real world assets, I think it's sort of a nebulous term. So that's government bonds on chain, corporate bonds on chain, equities, as Bruce was just saying, fractionalized real estate. And the benefits of that are clear. There's more liquidity, accessibility, faster settlement, lower costs, all the things we understand sort of blockchains give us. But trying to size that opportunity is really, really hard for most people. So what I shared here is a report from Bernstein, really big outfit, who did the numbers here. Looking at the overall opportunity, we're talking $700 trillion, which is, it's hard to even say, right? And taking, just a percentage of that, 1%, 0.5%, right? You get to an enormous market size that you can put on chain for these assets. And, the benefits, again, are just very, very obvious. So if we even assume a small amount of adoption, you're going to see this asset class grow exponentially.
Yeah, I mean, we had Meltem on, and she was talking about much bigger numbers even than 5 trillion. So it's pretty massive. Dave and Jerry, both of you. Dave, go ahead, then Jerry. Sorry, Jerry, I saw you had your hand up. But Dave, go ahead, then Jerry.
Yeah, I sum up Bruce's excellent soliloquy as the world needs a digital financial system, and we are stuck in an analog one. And the narrative that we should all be pushing when you talk regulation or anything else should be to foment that. But there's a couple of things that are really important here to, in terms of differences, and the arguments I made to, like, my friend Larry Tabb as to why everything Bruce said is true. First, the ability to trade true multi-currency. In the US, we take for granted everything's in the dollar, but that's not really true. The fact is, US investors want to invest in global companies. People outside the US want to invest in US companies. The market structure that's grown up around crypto and digital assets is full multi-currency, and it is a major innovation. Another, which we talk about and obviously understand, is the need for self-custody. But whether it's self-custody or delegated third-party custody, true ownership, which is really the cornerstone of both Bitcoin and, in fact, Ethereum and pretty much everything in the crypto world is exceedingly important, and it's much more important outside the U.S. Everything Bruce said about the U.S. is true, and I wrote a trade entry subsystem for Morgan Stanley back in the '80s, so yeah, I get all that. But if you go outside the U.S., remember something: the U.S. is I like to say, in Danny DeVito's words, the best damn buggy whip manufacturer left. We have the best analog financial system. It is by far the most efficient, by far the lowest cost. Outside the world, where they're nowhere near as low of a cost, they're going to embrace the market structure that we're talking about first. And so what that means for us, well, it means a lot of things, actually. It makes the size of the market huge. We get that. But it also means from a U.S. competitive point of view, it really matters. And I think that that's kind of important here when you're looking at all of these things, because it is a large market size. One last thought on the Bitcoin Ethereum divide, or the Bitcoin everything else divide. They can absolutely coexist. I mean, I forgot who it was that said it before, and I gave a few 100%, signs. The fact is, the use case for a true digital gold. Remember, in 1971, gold effectively represented north of 90% of the market cap of all value, right? It basically was the measuring stick against all currencies. Today, it's way less than 10%. So when we talk about digital gold and we say, yeah, Bitcoin has 20 times upside if it gets a digital gold status, well, that's true. But gold itself is probably 1/10 what it used to be, because it's been getting gradually demonetized by the system. So it's worth understanding both of those things.
Go ahead, Jerry.
Yeah, thank you. This is amazing discussion. I just want to bring up the point that the other killer use case for Bitcoin, apart from being digital gold and the hedge against the fiat system, is its security characteristics. I mean, it's proof of work. It's been around forever. It's the most decentralized chain. One thing we forget about technology is that this can all be made modular. When I was at Consensus a few months back, I stopped by University of Austin, and there were a lot of talks about how can you extract the security characteristics of Bitcoin and bring it to other blockchains in a modular way. So I think ultimately, going back to this divide between Bitcoin and everything else, you can have your cake and eat it too. I do think that free markets ultimately do tend towards duopolies. So I do believe that Bitcoin and Ethereum will probably be the major players into the future. But you can modularize the security of Bitcoin using proof of work, right? You can use Ethereum or some other smart contract platform to do the other things that those are good for. And you can end up in a world where, yes, Bitcoin is maybe the sun and Ethereum is Jupiter, but there are other planets that do orbit and moons that orbit around it, and there's place for all of those. There was one other.
Yeah. Go ahead. Sorry.
There
Go
was
ahead.
one last point, because I still feel there's a division in our industry between Bitcoin and non-Bitcoin and innovators and so forth. And there was a comment about, there's so many frauds in our space and so forth, which I do agree that is the case. But as things get better regulated, both externally and hopefully we'll get some of self-regulatory bodies within our industry, something similar to FINRA in the TradFi space. That hopefully will start going away, because that was when I started in this space. I came from the traditional tech space, and I was very reticent to join this space. Why did I join it? Because my biggest client was Fidelity, and they talked to me about Bitcoin. And I was very gun shy about all the fraud that was going on in the space. But I do believe it was back to the pink sheet days. Let's get good regulations in, but most importantly, let's all band together as an industry and do some proper self-regulation as well.
Have to mention every time we have this, but I mean, do you agree a self-regulation specifically for crypto?
Yeah, I think there's like
it's pristine. Go ahead, Tom.
Yeah, thanks. No, I love Jerry's point. I think we all recognize there's fraud here, and there's going to be a need for an act of Congress to regulate the big things, but I think there needs to be self-regulation for some of the smaller, more tangible items that we can attack as community. To stop dunking on ourselves.
Yeah, I think a lot of agree with you, but I think, to some degree, the bad players.
Politicians it don't work, so we a lot of us have this idea. It's like, oh, here's a problem, we've got to fix the problem, therefore we should have regulation. And the thing is, it just doesn't work, and we have a lot of evidence of that. So you're kind of picking your poison, and it's an illusion to think like, oh, we have all these solve the problem, because again and again and again, it actually makes a different kind of fraud more common. So if you have no regulation, the market will entirely regulate it, and the market works because the market is made up of people. So it's the ultimate in democracy and people voting with their dollars, and it works way better. The madness of crowds and everything else. Things will happen quicker, and that's what we saw with the ICO wave. That market was crushed not by regulators. They didn't come in with actions until years later. That market was crushed by the market. The market realized a lot of these were stupid investments, and they rewarded it accordingly with proper price discovery. So when you go into regulations, what happens is you have all the drawbacks of all these pinheaded nanny state bureaucrats sitting in fancy offices that they paid for with money that they stole from us, making life miserable for millions of businesses and people and burdening everybody. But it's not like, oh yeah, it's a real pain and we have to spend 3 hours a day and millions of dollars on compliance, but at least they stop all the fraud. No, they don't stop all the fraud. They don't stop any of the fraud.
Well, they didn't protect anyone. I mean, it's very clear. You just look at 2022 in crypto. Nobody. I mean, I don't feel protected.
and the more they regulate, the worse it is. It's just a different kind of fraud. You want to show me one of the most fraudulent countries in the world? I'll show you one of the most regulated countries in the world. You go to the places with the most fraud, it's a big bureaucracy and it's all corrupt. Places like Nigeria and stuff that are known for fraud have tons of regulations. Everybody's a regulator there, And in the United States, as we've grown on this march towards socialism and huge nanny state government, for the first time in my career, I've been registered under 9 SEC chairs, and this is the first time that I've felt like one of them is, so anti-business as this. And it's not just anti-business, but it's cronyism. When you have this huge, giant communist-style state, whether it's Soviet Russia or the current America, you end up with corruption. You end up with people like Sam who steal money and bribe politicians so that he can get access. And he had unprecedented access to the SEC chair. And you have people like Bernie Madoff, who became the head of the largest regulator. He was the most powerful regulator in America, and he was also simultaneously the biggest scammer in America. That moment should have been a wake-up call to people that politicians are not the answer. It's stunning to have Bitcoiners and other people saying like, oh, well, we just need just a little bit of regulation. It's like, why do you have so much faith in politicians? In 2023, these people are not smart. They don't have our best interests at heart. They are co-opted by big powers, and they're unbelievably stupid. Look at what they're doing with ESG and every other crazy thing that they do. They are not a solution. So the market, we got to let the markets work. And the pendulum has swung so far the other way. When I started my career 30 years ago, did you know you could open a stock account over the phone and buy stock without your ID, and you didn't even have to pay for a week? When I started, I'm not that old. When I started my career, you could call me up on the phone, never having talked to me in my life, and say, "Hey, Bruce, I want to buy IBM. My name's Scott Melker. I live on 1 Main Street, Boston." And I'd say, "Okay, Scott, how much you want? 100 shares. Okay, you're in. You owe me $3,800. You got a week to pay. Period. No social, no date of birth, no AML KYC, none of this nanny state bureaucracy that's just been piled on. That's how markets are supposed to work. That's how they worked in the United States for a century. It's pinheaded bureaucrats, statist, authoritarian nanny state Karens being directed by the Elizabeth Warrens of the world who are destroying this country, and they're suffocating us under this pile of regulation that does no good. It doesn't help us. It doesn't save us. It doesn't stop fraud. We have more fraud, and we have scumbags like Sam who get unprecedented access, and they're able to get meetings with Gensler when nobody else can get meetings with him. And then they go around and commit fraud. And then you have this other scam special purpose broker dealer that's being pinned up. It's like we're falling into the world of a third world country governed by corruption and special deals and special favors and cronyism. That's what regulation leads to. Anytime somebody says there ought to be a law, or if we just had clarity, if we just had more regulation, maybe just a few things. No, we don't need any of it. Entirely burn it all down and let the market, let the people, let us decide what we want to do. We don't need nanny state Karens telling us what to buy. This is America. This is an entirely new idea. And everybody who's younger than me doesn't remember that it was just yesterday that we didn't have any of this stuff. The idea that we need AML and KYC and a bunch of nanny state bureaucrats telling us what to do is a brand new and stupid and failed idea that does not work. It's never worked and it never will work. And we've got to swing the pendulum back the other way, take our country back, tear down the scammers, clean up our industry and get bad actors like Gensler out of the industry, and then move forward and do what we did for 100 years and have a great securities market where we have capital formation and reward entrepreneurship. It's the only way.
Bruce ran for United States Senate, by the way, for anybody who's listening, and you could have voted for him. Go ahead, Dave.
So, I mean, while I agree philosophically with Bruce, we have an expression when you sit down at the poker table that you need to play the cards you're dealt and not the cards that you wish you were dealt. And more importantly, what's going to be on the flop, what's going to be on the turn in the river. The reality is we live in a world where there is a government and they are going to regulate. And I definitely disagree with Bruce that they have done no good on balance, and everything he says about the current SEC and the ESG rule, 100% agree. So, well, let's focus on what they can do. And he specifically mentioned Prometheum. And for those who want to see an enjoyable rant, I put one up on YouTube yesterday on our CoinRoutes channel about Prometheum, where I basically took it down. But there's a really important point in there that I want to make now, which is we've talked about the frauds and we've talked about what's gone on. And the simple fact is, if you tried to use today's securities laws for if any project, let's just say you waved a magic wand and you allowed every single project to register as securities, would that help anything? And the answer to that is not only no, as Bruce says, but it actually would make it substantially worse. Why? Because there is no notion in our rule set for any of the things that actually matter when it comes to open source technologies and what we're trying to do. And the point is, you have nothing about tokenomics. There's nothing about supply. There's nothing about lockups. There's nothing about, whether or not, what sort of legal rights will pertain to the token, whether there's a burn schedule, how governance works. There's literally nothing. So you cannot do a damn thing with tokens that matters here. That matters here is, when we're not talking about Bitcoin anymore, we're talking about the rest of the cryptoverse. A network with capital formation with unaccredited investors, to use US terms. And by the way, Bruce and I, I'm sure, could both riff off of how insanely horrible that set of rules is. The fact is, if you're trying to incentivize developers, you're trying to incentivize users, you're trying to incentivize people who are going to adopt any particular new crypto technology, this brilliant idea of being able to have a native token, which will also support mining and the other technologies, the other things you need to secure the network, has literally no applicability in US securities laws as well. And people have recognized that. And so that's the important point. What I would say about regulation and why we need regulatory clarity is there's some regulations that are good and have done a good job. Almost all of those have to do with disclosure. And not to pick on Scott because but we know how you feel about this. If companies had clear rules that they had to disclose exactly where their money came from, there's not a human being or very few that would have left a penny in Voyager. We wouldn't have left a penny in BlockFi, and some people would have left in Celsius. And I distinguish that because no one would want to have an unsecured loan to some random fund outside the United States and etc. But some people might want to have invested in a hedge fund. But disclosures matter, and disclosure rules do two things. First, they give people information, although
is well received, obviously. James, go ahead.
Yeah, I was basically going to say a lot of what Dave said. I agree with some of the ethos of the things that Bruce was saying, but I mean, it really comes down to practicality and pragmatism versus idealistic views. And the stuff you talked about and he mentioned at the very end, it's just there are some beneficial things that could come out with rules and regulations that would have prevented at least some people from facing what they lost. And a lot of the people who got scammed and things in ICOs and rug pulls, I think would now be happy to have ways to prevent them from happening in the first place. Obviously, the market did push a lot of them out, but they're still happening now. So, I mean, like I said, there's idealism and there's pragmatism, and I think there needs to be a pragmatic way to look at this.
Jerry, go
ahead. Yeah, I think both could be true, right? I think I'm probably 80% agreeing with Bruce. I think the current system as it is right now is broken. There's too many regulators. Most of it's bad. There's a lot of crony capitalism and corruption that's plain in sight for all to see. But going all the way the other way, I think, is a utopian dream. I don't think it exists. I think, there are cases in the United States back in the early days where you had private firefighters. And, if the house that's outside of their limit was on fire, they wouldn't put it out because there wasn't regulations to control that. So I think there is a minimum set of regulations that encourage a better free market. We're obviously over-rotated way on the other side, and especially in the
it's just a matter of time. So, guys, I think that we've done a great job covering this topic and all this actually means and what it can mean moving into the future, and how the market and the structure should actually look. So it was nice to have, I guess, what we'll call a slow rotate and host Mario's. It's just a lot now. obviously want to separate and be able to run that straight from a controlled account that is all three of us. So please check that out. We will of course be back again tomorrow morning, 10:15 a.m. Eastern Standard Time. I'm sure you'll see a lot of these same guests up here. We love having you guys. All of you